Hello, YouTube. We got a big fail on the S&P 500, and I was wrong. So this is a video for the bears. Not only do we have a fail, we actually now have a bearish engulfing weekly candle, and we're below the previous low. This is bearish. We cannot ignore it. And we only have 1 day left. So did Jerome Powell pretty much, was it his fault today? That's what we're going to go through. And since I am wrong, we can clearly see the stocks are taking the elevator lower. Tesla leading the decline, and Elon is no longer the richest man on planet Earth. And I'm going to say something that not a lot of YouTubers will, but I have no problem admitting that I'm wrong. So here's a tweet. It says, I am seeing evidence I'm wrong with a weekly lower low. I'm guilty of being a bit too cocky. Learn from my mistakes. And this is really important because as much as I like to I like to have a thesis. More importantly, I know precisely where I am wrong, and my thesis is invalidated. So what that means is that right now I'm seeing some evidence that I'm wrong, and I'm going to make an apology. This goes out to the bears or anyone who felt offended by my jokes or anything I said in the last few days. I'm having a little bit of fun. Life is too short not to enjoy yourself. And now that I'm wrong, I'm going to walk you through exactly what my plan is to try to mitigate the risk and to confirm that we're not going for a lot lower. I didn't want to make this video, especially today. I was hoping we were going to maintain that weekly low, but we didn't. So the reason why I want to go through this is because if we go here to, let me just see if I can do this here. Let's go to a third board. If we go here to the monthly chart for the S&P, the bears are going to love this, by the way. So hopefully you guys still enjoy the content. We're down by $1 on the month, and this chart is not yet broken, but this is the last one that has any juice left. So if you look to the weekly chart really fast, what do we note? Well, we got a low, higher low, high, higher high, and then we got a bearish engulfing. So if this chart does not get fixed by tomorrow's close, then I am going to be laser focused on this monthly chart, because if now we fall back below 422, which is going to be our September low, then we got high, lower, high, lower, high, lower, high, low, lower, low, lower, low, lower, low. There's no way I'm going to say that this is bullish if we close a month out below here. Well, look where we are right now, 425. Look at the low. It's at 422. Why does this matter? Well, I'll make it really simple. High, lower, high, lower, high, lower, high, lower, high, lower, high, lower, high. Okay, let's keep that in mind here. Why? Look, monster dead cat bounce, lower high. We only have one lower high so far. So why is this so important? Well, because even myself, I'm looking here and I'm like, okay, well, am I exhibiting complacency? Let's read what it says. We just have to cool off before the next big rally. Well, that's kind of what I've been saying, isn't it? Yes, and I'm trying to be objective. And the reason why I'm doing that is because if we don't learn from past mistakes, we're likely going to repeat them again. So let's look at the chart here objectively. We have a monster run, maybe a blow off top. We go down, bounce off our moving average, monster dead cat bounce, and then we got a lower high. So make it really simple. All-time high, nasty cut, dead cat bounce, lower high. What do we have here? Let's zoom out in time and see if I can actually tie this together for you, because if we're repeating the seasonality chart, like it's a little late to be making a new monthly lower low. So let's go here. Let's see if we can extrapolate this. Monster runoff. There's our nasty cut. There's our dead cat bounce. And what do we have? We have a neckline right here. So we have like some kind of, it's not a perfect head and shoulders, but I would say it's there. And the telltale sign is high, lower, high, lower, high, lower, high. And then we keep getting lower lows. Closing below the previous candle low is terrible. And that usually means there's more downside ahead. So before we go further, I'm going to ask you for a huge favor. If you could please consider smashing the thumbs up and subscribing to the channel, I would really, really appreciate that. And I do really want to make sure that anyone who might have been offended, like I said, in the last few days, I teased a little bit, I made fun, but it's all in an effort to try to make sure that I'm trying to make the shows not only informative, but also a little bit entertaining. So I'm sorry. I apologize if that came at your expense. And I'm sure, I am positive, a lot of people are going to be doing the I told you so today. All I would suggest is that if you're feeling the need to say, I told you so, that's what I felt like saying for the last week. And guess what I got? I got a big serving of humble pie today. If you don't want to be like me, learn from my mistakes, which is what I just told you. So when we're thinking about the potential for this to happen, what does it mean now? We get 4 weekly candles, which means that as of right now, this weekly chart is telling me that, yep, we're getting a warning here. We look at QQQ, another warning. We don't have a bearish engulfing candle, but we do have a lower low, and we're below the previous low. and we got this rejection. So QQQ could come all the way back down here to about 350 without doing any damage. I'll show you something else that I don't quite love about today. We lost our short-term daily uptrend for QQQ, and as we're going lower, we see an increase in volume. This increase in volume is much more evident when we look to S&P, though. Let's go to ES, actually, because including after hours, we want to look and see what's happening here. Decreasing price, increasing volume. So I'm going to tell you now what I'm going to do in terms of my plan. And then I'm going to walk you through at the end of the video how I'm planning to make changes to my existing strategies, because I trade ES. That's in one of my accounts. I trade ES. I have a swing account. I have an investment account. So each one of these accounts is going to be managed differently because we have different risk tolerance. And what I'm going to say is just going to go back to what I have here. I have a thesis, but more importantly, I know precisely where I am wrong. So as of right now, I'm going to tell you what's happening for my plan. Let's go through it right now. So for the S&P, if we close below 427, I'm seeing not just evidence, but confirmation that I am wrong. If I'm wrong, I don't want to stay wrong. So what am I going to do? I'm going to likely start to hedge in my long-term account a little bit. And then I'm going to be watching for confirmation, which would be a monthly lower low and a close back below 422. We already have the lower low and the lower high. So like we see on the psychology chart here, let me go back to it. Let me go back to here. Do I have it? So high, lower high, lower high, lower high, lower low, lower low, lower low, close below the previous low. Yep. Then you're feeling a little bit of anxiety, then denial, then panic, then capitulation. So we don't want to be caught this far down the road where we're not expecting to move lower, and then we really get surprised. And the other thing I'll be watching for, like a hawk, is whether or not there we go. We got a breach, 5.001. So we technically have a higher high, and this is going to be over 5% now. So this could be what's going to cause another leg lower for stocks. We're going to have to pay attention to see exactly where we go from here. So was it really Jerome? Well, I only really saw one headline from him today. At the margin, yields rise could mean less need to hike. But I don't think that's really what Jerome wanted to say. I think what Jerome wanted to say was something different. And I'm going to talk about all the other bearish news that we saw happen right now. So we saw an escalation in the Middle East. Joe Biden's going to be giving an address tonight. And this will be particularly important. And we also got another non-vote with Jim Jordan, and he's flip-flopping on whether or not he wants to hand over to McHenry. We just basically don't have a Speaker of the House, and that's a problem. The other reason why I think this is a problem is because if we look to the move on the 2-year note, this one was actually down, which was, on Thursday. We're just opening up the new session now that it's 5 o'clock in New York. But the 10-year note actually went up. And the reason why I'm concerned about this is because I would have expected both to go down. And they initially did, but then they reversed all the way back, and then the 10-year went to a higher high. I think part of the issue here for the U.S. is that if Joe Biden's going to be announcing an aid package for Israel or the Middle East, it means that we're going to have to print a whole bunch more treasuries to fund that. And there's already a huge wall of people who don't want to buy. Banks can't buy. China's selling. Another update today. They're dumping their treasuries like you wouldn't believe. So who is going to buy? That seems like a big problem. So what happens? Well, yields go higher. And this is for a non-economic reason. So this is not good because this is outside of the control for the government. What this really means is that people know the U.S. has to borrow, and they're saying, I want a higher premium. I think you're not very credit worthy. You've had a downgrade twice, and I want more. I want to get paid more to be sufficient for the risk that I'm taking on. So that's really what I'm doing. I'm going to go through a little bit more now to try to just wrap this up. Something else that I saw yesterday that I also ignored, so again, learn from my mistake, was that I'm looking here at SH. We talked about the alerts on our platform before. We can look here at SH for a swing algo. This went off yesterday at a price of 14.39. We're currently up by about 1.3%, and we had a risk reward of about 1.5 to 1. If I look here on the chart, sometimes it can be a little bit easier to look at the chart when we are, let me go back here to the one-day chart. Let's look at SH. So instead of just looking at S&P and trying to find out whether or not it's bearish, if we look here at SH, can you tell me this is bullish? Well, over, right, below the 50, bounce, bounce. If we get back above the 200 or the S&P falls below it, I'm going to say that's bullish. Volume is ramping up. This looks constructive. I'm not going to lie. And we got that alert yesterday at roughly 14.39. So what this means is that if we look at the alert here, this says that we're bullish for potentially 2 months. This could invalidate my entire bull thesis. So do I want to stay long and wrong, or do I want to flip? Do I want to flip flop like a flapjack? Not quite yet. What I'm going to do is wait to see what happens on the Friday close. But like I said, we're seeing evidence. We're no longer pointing up, and this is the point at which the story can start to self-fulfill, and we can really start going a lot lower. We've been unable to reclaim the 50-day moving average, and if we now retest that 200 after tapping it 1, 2, 3, 4 times, it could just wash out. There's going to be a lot of sellers below that 200 DMA. All right, so now in terms of my my main account, sorry, not my main account. So I got multiple accounts. I talked about my swing account. If you go over to here, let me see if I actually want to do this. So give me 1 second here, because I think what I would like to do is to just preface this by saying that, yes, I made fun of the bears. Yes, I understand I'm probably going to lose money. Is that going to hurt my feelings? Answer is no. But I'll tell you exactly the reason why. Because as of right now, if I actually, I don't need to do this. I don't need to prove anything to anyone. So I currently have stops put in with all my stocks. And what that means is that I know exactly how much I'm going to lose if we keep going lower. Generally, as a rule of thumb, if I'm risking $1, I usually want to make at least 2. So if I'm risking $1, I usually want to make at least 2, but ideally I want to make as much as 10. So in my trading account, hey, if we go monthly lower low, a lot of my names are already quite close to stopping out. I'll stop out. My feelings will be hurt, but I'll survive to trade another day. However, when it comes to my dollar cost average account, right now I am 35. I don't plan to retire for a long time. So if the market comes down, I'm just going to buy more. The area where I like to buy more of the S&P is between roughly 380 to 400. So roughly between these Fibonacci numbers here, 379, 398, and we also have this 50 monthly moving average here. So I bought a whole bunch of stock going into the last Fed meeting. I'm red on that one if that's not clear. This is a dollar cost average account, which means that I have no stops. I have no plans to sell. All I plan to do is buy more. So if we come down to a level that I feel confident in, that would be roughly 400, roughly 380, somewhere in there. I'm going to make another deposit into my account, and I'm going to be happy with that. And the last thing I want to leave people with is that we now want to look here to our chart, to try to be a little bit objective about what is currently above and below the 50-day moving average, because I think it's really important that we understand that right now, a lot of charts are at a critical area. Right now, Microsoft is over its 50-day moving average, but if you look at a 12-month chart, excuse me, I just bit my tongue a little bit. Last year's high, 338. I really want to see Microsoft get back above that. It's tapped it a few times now, but it's having a really hard time getting over it. So it's nice that it's over the 50-day moving average, but this is not enough. Only one stock so far. As we go further down, Tesla's basically tanked all the way down to its 200-day moving average. We move down here to Nvidia. It's below its 50-day moving average for 3 days in a row now, and it's not trending up anymore. It is now actually at risk of not maintaining the low, higher low, higher low, higher low. It's still a higher low, but if we blow out 409, it doesn't look good. We could be going for a gap fill, which means the market's likely going to be tanking. Moving forward to Bitcoin, hey, Bitcoin's moving higher. Looks like people like to buy the Bitcoin. Apple below, rejecting off the 50-day moving average. That's not nice. It's not bullish. It's not good. SMH is below for the third consecutive daily candle close with volume ramping up. QQQ, we got 2 daily candle closes below now, and I noted that as a warning yesterday. So I'm definitely seeing evidence. S&P below. We look at FXI below. We look at ARK way below. We're actually due for a death cross here, even more bearish. We can move forward to the DAX, death cross, and it's down. Doesn't look good at all. We can move forward to Canada. Stinky. We got a death cross here too. So death crosses on multiple charts just means that we have lagging momentum, and we're likely going lower. I'm going to ask you one more time, please and thank you. Please consider subscribing to the channel. We publish stock market videos every single day, and we're going to have a stream going through the final hour tomorrow to show you exactly whether or not the bulls or the bears are getting trapped, because every Friday we talk about a trap. Emerging markets, death cross, and it's way below. Not looking good. Nikkei tried to poke over it, and it's gone. Can't hold it. And Ether below. So not a lot of charts are currently above. This pretty much means that the market is fairly soft. It's fairly weak. And with that said, I'm going to leave you with the video over here, which is going to be the weekend deep dive, which was my larger thoughts going into this week. If you want to subscribe, that should now be over here on the right-hand side. But if not, maybe you want to subscribe to the channel to come hang out with us for the final hour tomorrow. Again, I apologize one more time. I had a little bit of fun. If it was at your expense, I'm terribly sorry. I'll give you the Canadian sorry, and I will look forward to seeing you tomorrow. Thank you again, and good luck into the weekly close.